that man is me. He knew him at a glance. That stranger he is found. This man could be my chance. Why should I save his hide? Why should I right this wrong? When I have come so far and struggled for so long. If I speak, I am condemned. If I stay silent, I am dead. I am the master of hundreds of workers, they all look to me. Can I abandon them? How will they live if I am not free? If I speak, I am condemned. If I stay silent, I am dead. Who am I? Can I condemn this man to slavery? Pretend I do not see his agony. The sinner sent to bear my face, who goes to judgment in my place. Who am I? Can I conceal myself forevermore? Pretend I'm not the man I was before. Must my name until I die be no more than an alibi? Must I lie? How can I ever face my fellow men? How can I ever face myself again? My soul belongs to God, I know. I made that bargain long ago. He gave me hope when hope was gone. He gave me strength to journey on. Who am I? Who am I? I'm Sean Valjean. So far you see it's true. This man bears no more guilt than you. Who am I? 2, 4, 6, so what?
Alright. Bonus points to any trader who knows what that song is from. Pretty easy one to begin the week there. Bonus culture points. Surely one of you know that. Les Mis. Disappointing. The whole soundtrack's ridiculous, actually, and that was one of the original cast singing. Who am I? Alright, it's Monday. So, Friday night you got a little bit of risk off, especially towards the end of this session. This was mostly as rumours of the Turkish coup began. Fairly aggressive selling, but nothing too crazy. Nothing in terms of key levels are broken, but definitely if the coup had gone through successfully, you would have seen some more dramatic selling. So the fact that it didn't, you saw this pop back higher. If anything, you saw fresh highs in the Asian session just briefly, and the risk-on sentiments continued fairly well into the European session, although it's a little bit more mixed. The gains are a little harder to come by at the moment. But what it does mean is that the general trend, which was being developed last 2 weeks or so, has continued, and it's very dangerous to try and fight that trend. So what I mean by that is selling dollar yen or selling any yen crosses without a reason, apart from profit taking, right, it just doesn't make sense at the moment. Still got some room to move on the upside, especially the pound as well. I mean, the pound is had that big pullback. It was one of the hardest hit when the risk turned off. I mean, it actually did most of that move before the risk off, but just generally it was running with those US stocks. They were a little bit weaker, but we have been caught above 130 so far. So if this wall of worry is climbed again, it's harder for the sellers to get excited. Yeah, this sort of price action suggests that the buyers are a little bit more in control at the moment. So without some sort of negative news to get it selling, it's hard to. And while risk remains on, substantially on like it is at the moment, you definitely don't want to be selling this particular pair because the pound yen can come through and start that buying up again. And it's just you're relying on negative news or fundamentals here to get the pound selling, but that hasn't been working for a while. I mean, the pound's had the same current account deficit for a long time. So yeah, let's not be selling while stocks are rallying. Sort of the same deal goes with dollar yen and with the Aussie. Aussie's a little bit stronger than the others because we'll get into what's going on with the other commodity currencies at the moment, but the Aussie is holding its own. It did have a pullback, nothing that is going to cause the bulls any headache just yet though. So while stocks are on, you just can't sell. Yeah, it's very hard. We do have the RBA minutes coming up tomorrow. They should be a non-event. If anything, they'll just give another reason to buy as it goes to a more neutral setting and waiting for that next CPI number. In terms of how important the CPI number is, if you look at what happened to the Kiwi today after that weak number this morning, pretty aggressive selling, even with that risk-on attitude. So yeah, the Kiwi is one, if you're going to sell commodity currencies, if you want to get sort of short risk tactically, then selling the Kiwi makes sense. It may go down by itself anyway. It has already fallen, 2 cents though, but if you know the Kiwi, you know that it can do a lot more than that, and sort of it does like to catch the market off guard a little bit. I'm not saying that we're going down for a long time, just the chances of a rate cut next month are now increasing to like 80% because the inflation data missed. So if the inflation data for Australia next Wednesday also misses, Wednesday week, you expect similar sort of price action, and you might actually see the same sort of price action on Monday next week as you start to see Thursday and Friday last week in the Kiwi. So the market starts selling in anticipation of it, gets down to a key support level, and then uses that weak CPI number to break that support level. Really does damage to the technical structure. That happens a lot in the markets, and it's just no one wants to be buying aggressively the Aussie next week early before those CPI numbers, especially when our neighbour has got a weak number coming in. Yeah, it just doesn't make sense. So although the Aussie Kiwi is enjoying gains on the back of it, and we are long Aussie Kiwi, just be aware that the same sort of price action that hit the Kiwi can happen to the Aussie probably starting maybe Friday. So it's a little ways away yet, but just something to keep in the back of your mind. The market may start to take profit, and then if the number's weak, they will really, really punch the Aussie, because the Aussie RBA meeting is like August 2nd. So it's only a really small window between the CPI number. And if you remember what happened in April, we got the really weak number, and then they cut straight away. So let's have a little look. Yes, the RBA is actually August 2nd. So yeah, there's only a 5-day turnaround or so. 5 business days. So you can get some heavy selling and sort of like a trend breaking sort of move, and that's backed up by the rate cut. Australian interest rate differential will be starts to be really eaten into. It's be down to 1.5% at that point. So the RBA will cut no matter what if the inflation is low. Very hard for them to not cut. They've got a lot of the mandate basically forces them to. So let's not try and play chicken with them on that day. If the number comes in next week anywhere near showing year-on-year inflation at like 1.6, 1.7, 1.8%, it'd be pretty much priced in that they're going to cut. Now the effect of that could be only short term, and maybe only down to like 72 or something, but you really got to be careful when the market starts cutting rates, right? How low the currency can go. If you remember how far it fell from 78 down to 70. 78.5 all the way down to 71.5. Alright, so that sort of substantial fall is definitely on the cards. But meantime, I don't mind us running up towards 78 in the next 4 or 5 days. I mean, it is contingent upon the risk remaining on, but then we can start to be tactically short maybe Friday or Monday, just in case that number comes in weak, because the risk reward is so much to the downside if that inflation number on Wednesday comes in weak. So the Kiwi maybe is got moved to 68 coming, right? It just got to get more of the market involved in thinking that they're going to cut rates, the RBNZ. Yeah, so Aussie Kiwi is actually not a bad little play. Definitely pound Kiwi is not a bad play. Let's have a little look at that bad boy. Don't trade pound Kiwi if you are not 100% sure which direction it's going though. It will kill you. It will kill you faster than pound yen. Alright, so there is substantial room to the top side here for the pound Kiwi. If there was to get that breakdown, could easily target, even 195 if the pound was to hold its own. If not rally to say 135 and the Kiwi goes down to 67, 68, that's a 195 there. So that's very possible, guys. We'll look into that a little bit later. As the market focuses on the Kiwi, or if we get a stall in the stock market rally, some sort of reason to be selling risk, then we'll be hitting the Kiwi harder than we hit the Aussie. All right, so yeah, I mean that's the big news in the Antipodean currencies. Antipodean. I believe that's how it's pronounced. It's not said much. It's read a lot, but it's not said much. So today what we'll be watching is, we're a little bit interested in what the US reaction is on the oil market, because the oil had that spike higher back into that old range on the back of the Turkish coup, which had the supply problems. And so far there hasn't been much of a pullback, just a little bit, right, from the open, about 50 cents. And it's been caught, and it's still quite strong. So in this game, right, if it is to roll over and stocks are to roll over, or if oil goes down and that leads the stock market down and gives a reason to have profit taking, then the Canadian dollars are going to be on the most dangerous footing here. All right, the Canadian dollar will be strong until oil breaks. When oil breaks, Canadian dollar will get weak, and then if that coincides with also some selling in the stock market, which will happen at some point, you can't just have one-way action like we're getting. This is huge rally, little pause, huge rally, potentially little pause. So even a 300 or 400 point pullback here, it is worth 200 points in the dollar CAD higher, right? And it is worth 100 points in the dollar yen. So I'm not saying that's happening today, but at some point, probably this week, you will get some selling. In the meantime, though, we remain long until that begins. Just the one way is going to be the sell straight CAD, sell straight Kiwi against the US dollar, or sell straight CAD against the US dollar, buying dollar CAD. Right, so that's something to be wary of. I mean, these are not the easiest levels to be trading now that the market's overextended. But the way I'm playing at the moment is the cross on dollar yen just long, straight Aussie Kiwi, straight Aussie, and long pound Swiss. Pound Swiss has got a fair bit of room to move on the top side, I believe. So we're looking at a trade yesterday, before the BOE, did just sort of spike and peter out, 131.50ish. Came back down, found support again though. So when risk is gone, this does well, and you don't have to just rely on the pound. You can rely on the dollar Swiss. It's similar to the pound yen, but not recovered anywhere near as much as the pound yen has. So I do like that risk reward wise. If it gets back below 129, I'll think about cutting it. It's a similar trade to the euro pound. All right, so in regards to the euro, I mean the euro right is in play this week, but not until a little bit later. And finally, we're going to break out of this range. And my gut tells me we're going topside. Now, the reason for this is that if the BOE did not do anything, then there's less pressure on the ECB to do something, and there is already priced in a fair bit of something coming from the ECB, right? So when nothing comes, when Draghi just says we're staying the course and we'll just be ready to react if anything happens, that could be an interesting scenario where you get some euro strength, maybe some pullback in the DAX. That's a dangerous day this Thursday. Kind of coincides with the timing as well that we need a pullback. What's going to give the impetus, and maybe the ECB will give us that. So I'm going to be keen to watch that. If we get back above 112, right, you're probably looking at potentially this 115 level coming back into play after the ECB, right? So it's not just a one and done. It could be a continuation move because it's been coiling up here. We're looking at the Aussie Kiwi, right? And we're saying, geez, it's been in this pattern for nearly a month. All right, and then finally broke out of it. Bang, bang, bang. A little bit false breakdown here, but it just has that continuation. It's almost like everyone just jumps on one side after it begins. So that we'll talk more about the ECB as it comes closer, but yeah, that's a very distinct possibility, I believe. Also, that could coincide also with some disappointment. I think the market is demanding action from the BOJ and MOF, right? The longer we don't get nothing from them, the more it may chuck a tantrum. So there's been nothing specific said from Japan, just they're formulating something, right? And we need to hear what they're formulating more because the market can only do so much on rumor and speculation, right? It needs some more substance before it. And then, we are in a very long-term downtrend here. This is not over yet for the bears, right? The bears are still relatively in control. In the longer term perspective, nothing major has been done. I mean, we get to 112 and then it's like even game. But before, while one underneath 110, while underneath this downward trend line, you got to respect it. And most of this is on rubbish, right? This is all fluff. The stock market rally, yeah, that does support it, but the stock's rallied. So what? You want another 1,000 points in the Dow Jones? That's the scenario you're telling me, or you're telling me that they're going to go even bigger nuclear in the Japan? How this gets higher, I mean, is up for grabs here. It can get higher from the US dollar side. It can get higher if it becomes a talk about Fed hiking rates and the yields start to increase over there in the US. So far that hasn't happened. The next rate hike from the US is now March. It's still March 2017. Alright, so in that scenario here, you got to be very careful as we're entering up towards that. I'm going to be still bullish now, but as we get closer to above 106, I'll be very careful. Definitely want to see some more reasons from the BOJ or from the stimulus package to be involved in that long. I always want the pullback, right? I want the pullback in stocks, and I want the market to catch it so we can get that next leg higher. I don't like the way the market just not pulling back at all. It's too dangerous. But you have to play what the hand is dealt. If you want to trade every day, you gotta play the games that are given to you. That's why we're looking at the crosses so much at the moment. Nothing apart from, say, the short Kiwi is showing clear technical signs of breakage, right? I mean, obviously the dollar yen's very strong, but like I said, it's really close to that big resistance. All right, let's see if there's any questions here and have a look at some of the trades in the trading room. What do we have here? Long dollar Swiss from Firesward. $1 Swiss. So the only problem with this trade is that it interferes with my ECB disappointing trade. If the ECB disappoints, then dollar Swiss will be dragged lower. You know, not really because it's, you know, actually connected so much, but just because the correlation there makes it connected. So Euro Swiss will rally, you know, potentially towards Euro Swiss. Euro Swiss. Buy that. Euro Swiss will rally just because you know, the euro is going to be really strong, but dollar Swiss may be dragged down 50, 60 points. Maybe even dragged down to the lower, you know, below 98, even below 97.60 on the back of a huge rally in the euro. So I don't know. It's not a bad trade. I just don't know the timing of the trade. So let's have a little look closer at it. This you know, maybe the ECB does come out and be ridiculous, right? They've done it before. And, you know, obviously if the US Fed if the price comes to December or even earlier, then yeah, this is going above parity. So it's not, you know, it can make sense, right? 99.80. I'll tell you what, we're probably going to be okay here for a little while. We can take some profit a little bit later. 99.80. Oh god, we're gonna have to change some time zones here. It's been a while since it's been up here. Let me turn down that fucking... It's hurting my ears, it must be hurting your ears. And where does he put his stop? 97.80. Just below that previous low, it looks like. Alright, so yeah, not a bad trade, Fastwood. I just worried about the ECB, yeah. It's been dragged into it. It's like worrying about the, you know, the Kiwi when there's an RBA rate hike or cut that will be affected. Short the euro. It's a very similar trade to the one we just talked about, so I might just leave it alone. And looks like his TP's and yeah. Yeah, it's not a bad trade. I'd rather be long dollar Swiss, so you know that's fine. And what we got here, we've got Nick Long. You guys are just trading 20, 30 pip stuff. I'm not going to do that just here. Evelman has gone long Swiss yen. Have not looked at the Swiss yen chart in months. I'm guessing it's close to 100 and something. Let's have a little look. Is he long or short? Short, okay. Yeah, short makes sense. But it needs the stock market to roll over. So if you're selling here, you're basically front running the stock market to get that to happen. So it's yeah, it makes, look at that, I mean, perfect little downtrend, right? It's cleaner than the dollar yen downtrend, that's for sure. But yeah, once again, you're looking for stock market weakness to get that safe haven buying going. So, you know, this sort of, see these ping candles, right? These little, you know, up here. You're probably going to start to see, you need to start to see some of those over the stock market. You're not really seeing that up there. Still just trying to edge up. Let's have a little look at the DAX. Yeah, I mean, if it's going to roll over, it's going to roll over here, right? I mean, this DAX, right, is... Jesus, that day. That was a death. This DAX has come from 12,000. We've still got significant upside, you know, potential here. In terms of valuation in US dollars. The euro is quite low still, so it's really underperforming. European equities are really underperforming. And they were favoured to do well this year, so it's... Yeah, potentially maybe in the second half we do get that rally. But it's a lot going on in Eurozone, right? A lot of negative stuff that hasn't been resolved. They still haven't resolved the Italian banking stuff, so immigration stuff as well, and just at some point they're going to be jumping to the next referendum, next general election, where there'll be a right-wing party looking to hold a referendum to leave the Eurozone. France has said they're going to do it. I think it's Portugal, the other one. It's not for a few months though, that's for sure. Yeah, but definitely you can still see that the DAX is struggling. And we won't go back more than that. These trades are 7 and 10 hours ago, so we won't have a look at that. In terms of the Aussie Kiwi, we talked about being long, obviously, but we didn't talk about how far it can get. 110 is achievable, yeah. If the Kiwi really falls off a cliff, 110's, just at least target, low 190s, 109s. And so we'll be looking for pullbacks to buy. I mean, this is sort of pair doesn't give much chance to buy as well. So yeah, we're basically long here until next Wednesday in regards to the Aussie CPI, and then we have to see what that number comes in before we play it anymore. But we want to continue to be long until at least next Monday. Hopefully we can get up to the mid 180s, at 108s at least by then, but it does require that the Kiwi does, sort of go down and test 70, potentially break it. If it breaks it, we'll go into the mid 109s, but if it doesn't break 70, then you may be caught and just take profit early. You don't want to be holding this into the CPI next week. On Thursday, there is a very important note as well. On Thursday, there is the Kiwi OCR update. So the Reserve Bank's actually coming out and giving an update mid-month about what they've planned to do. And they announced this last week, so maybe they did have full knowledge of the week CPI numbers. So this could be interesting. This could be very interesting. Definitely very big potential to be a huge bear event for the Kiwi. You don't have special meetings very often, right? Special little updates for the market. Here's an update for you, market. Your pricing is all off. We're going to cut rates soon. That's the only thing we can sort of think of, right? Stop buying the Kiwi is what they're going to say. It was getting really out of control actually up here. Just relentless buying. Just too much yield. It's too much risk on, right? And they're just pumping it up. But it looks like it's been put into the sin bin for a couple of weeks. I don't mind this actually. I don't mind a big pullback in the Kiwi just on whatever. Because if stocks and sentiment remain strong, it just provides you really good entries to sell, say pound yen, or to sell euro yen, or to buy Kiwi against the US, or to buy Kiwi against the New Zealand dollar. So Kiwi against the yen. So I don't mind the big pullbacks that the Kiwi does. It's just I don't want to get caught in one. The bigger the better. The bigger the better. That's a carry trade, remember. This one is one of the ones that pays you good interest every day. Alright. What's the wheat ticker? My carrot juice. Not great. It's not bad. DRC, I'm pretty sure it is, but I'll have a double check for you. It was something to do with something important. Okay, well that also is very important. Right, don't underestimate what that is, because that allows them to cut rates. All right, so what happened? You know, there was that big speech that they were going to have about the new rules, and the market got ahead of itself. Yeah, that was down here. Then there was supposedly a big problem between the Prime Minister and the RBNZ about them not moving quick enough. Yeah, not moving quick enough on the new housing measures. So perhaps this quick turnaround maybe is to do with just that, and doesn't have anything to do with the CPI and the rates market. But the exact terminology of it, we can find out if it's on any of this. I'm 100% sure I heard it from the boys. All right, it's time for us to find out. When we don't know, we're going to find out for sure. Bank of New Zealand. All right, Bank of New Zealand. So definitely, this is not the RBNZ, so don't confuse the two. This is Bank of New Zealand, which is like a part of NAB. Yeah. It's an economic update. All right, we're in there now. Let's take off the stream there. Don't you start, you DCRP. Aussie banks, what else are we going to do? Get a Kiwi bank? They're tiny. We have to. So it is a bank in New Zealand, it's just owned by NAB. Another big bank in New Zealand is, ANZ, Australia New Zealand Bank. Right? It's there is the crossover a fair bit. Alright, so the bank has said that the gap between the June monetary statement and its August OCR decision is too long a period to pass without some comment. We agree, but of course we're quick to point out the bank wouldn't feel the need to say something unless it was upset by something. See, this is what we're talking about. Why do they hold this special meeting unless they want to correct the market's pricing on something? So, yeah, I think it's probably not going to be too explicit about cutting rates, but like you said, it may be about the way the market's going to actually get into to fully cement it by doing something about the housing. But they have, if it's an economic update, they have to give a hint, nudge, right, to the market about what they're thinking. So August rate cut is now 75%. Yeah, but it is up to RBNZ to actually come through and do something. If they fail again, they can't keep crying wolf. This is the problem that the RBA had when the market rallied up to 110. They kept on trying to talk it down without actually doing anything. And I know that the RBNZ doesn't want to cut, and I know the RBA doesn't want to cut, but at some point they have to actually do it. Maybe they'll just be aggressive in the jawboning, right? And then they don't come out and cut because the rate might be really low, but Jesus, that'd be cheeky. They want to get the currency lower, right? That's what their game is. And it's true, if the RBA does cut on August 2 because there's a weak number from the Aussie, then it'll be really priced in that the RBNZ is going to move. So that's an interesting way to trade the. That's a very interesting way to trade the RBA event, right? Is to be short the Kiwi. If it's a 50-50 looking like from the RBA, then short the Kiwi, because if the RBA doesn't, then the Aussie will rally a lot, but the Kiwi only a little bit. Whereas if they do cut, then a lot of people jump across and say, well, the RBNZ is going to cut now. So you get that follow through. You might get initial move, might not be as big as the Aussie, but you might get the follow through. So it could be interesting there. We'll talk about that, I suppose, in August 2nd. If someone reminds me of that game, that trade, I really like that trade idea. But probably what will happen is the market will be 80 or 90% the RBA is going to cut. But there is a chance it might be really close. Say inflation comes in as expected, then we might have a 50-50 scenario again for the RBA. So interesting little note here. Indeed, we think the RBNZ will not only have to cut rates in August, but leave the door wide open to one more cut thereafter if it wants to gain some traction over the currency and maintain its own credibility. This is good points. Yeah, but economists and banks have been really wrong on the Kiwi before, so let's not get ahead of ourselves, thinking that we can understand the central banks here. So a little technical update. Haven't looked at this one for a little while. Every now and again, you see something in these technical updates, right, that you miss if you're just a fundamental guy, like I'm mostly fundamental. So I like to tell my stories about the market and why it's moving, but sometimes it's good to know if the 200-day moving average has been broken or is being approached. So you can tell that the dollar Swiss and the euro are so closely connected just because the 200-day moving average is so close to the market right now. So that's a target here for the Kiwi if we do get that big sell-off. Natural target as well. Alright, so none of this is surprising stuff. There is that congestion though coming up with the dollar yen, right? I really don't mind the Euro Swiss long either. I think there's a bit of upside chance there from the ECB. And it's a little safer than playing against the US dollar. Let's have a look at the trade of the week from Deutsche Bank. Long Euro Aussie, interesting. So they're obviously looking for the ECB to not do anything. That's fine. They're the biggest bank in the world, remember, when that comes to FX. And they're looking for potentially, I think, the Aussie to follow the Kiwi law. And it is true, the 50% rate, 50% chancing of an August cut is probably underpriced given that soft pre. This is just beautiful. Beautiful trade idea. It also will go up if there's a stock market sell-off at any point this week. So there's a really many ways for it to come. The only problem with this trade is it's so far against the trend. But let's have a little look at it if it's holding above 145 right now. This could be a trade that we do. Let's see how old Deutsche Bank goes. Let's get into that trade right now. Alright, still down here at the 145 level. Jeez, it looks a bit sick though, doesn't it? Alright, well, let's just see if we make or lose money with these boys. And where's their stop? Jeez, I've been stopped out a lot. Oh god, I should have looked at this page first, right? Hit ratio of 33%. Oh Jesus. Just 5 pages of disclaimer. Okay. Probably need that, don't they? Are they going to give us the exact entry and exit? Alright then, suppose we're just going to have to... We're just going to have to play it by ear, alright? If it breaks 145, we might have to cut it. They'll try and hold it into the ECB meeting, but yeah. Could have just got swallowed in by some dubious cats here. I mean, the idea makes sense, but it requires something to happen that hasn't happened yet. That's the only problem with this whole trade. I mean, there's many things that could happen to force the Euro Aussie to rally, but none of them have happened yet. When you're banking on something to happen that hasn't happened, that's a little bit dangerous in trading. Alright, we might just end with just quickly check what's going on in the market. Alright, a little bit of risk off coming through, nothing too aggressive. Check the Aussie. It's not helping the Aussie get above 96 though, is it? Alright, so... some clients ask me about trading the lira. Just don't. It's really hard to trade. It's ultra aggressive, right? Lira's, you know, moving around 3 or 4% a day at the moment because of that coup, and yeah, it's just really hard to trade. I mean, it's it's got reasons to be high anyway. Doesn't need more, and it could not. You know, there could be some more shoes to drop, and it's probably not helpful. You know, to the backdrop fundamentally for an economy to have that. Maybe hurts the tourism going forward as well. So that economic growth might be really negative for a little bit. So although it's people will like to sell it because it looks a bit more stable post coup, it's just you never know. It may not actually retrace everything. It may kick on and go higher. Sort of like the Russian ruble crisis. It was a slow burning crisis until it really got out of control last 2 years ago. This looks like a big boy. I might read this. After the stream, or a little bit when I've got some time. All right, boys. There's no questions. We're gonna finish it up here. I'll be back tomorrow, same time, 9 GMT. We'll see how bad Deutsche Bank's trade idea is going by then. I don't know why they keep on publishing something which has a 33% hit chance. But we'll see how they go. All right, boys. Good luck.